What's going on, everyone? We're going to look at the Nasdaq 100 from a weekly perspective and kind of see where potentially we could be heading, right? So what I'm starting to see a lot more of on social media is a lot more people getting extremely bearish, right? Now, it's entirely possible that we could go into a bear market this year, but realistically, I don't really think that's the case. I think right now we're in a very healthy correction territory. I think things are moving in a very good direction. I think that people's impatience is going to get the worst of them in this period of time, and they're going to miss out on making a lot of money. So what I've drawn up on this weekly chart is a Fibonacci going from swing high, okay, all-time highs 22,450, down to the yearly lows of 2024. Okay, so very, very big range, over 12 months worth of range. And the reason being is I want to potentially see, where have we already tested? Where have we already, kind of bounced from? What areas have been acting as resistance or even support? So you can see here, we've already tested the 38.2, the 50% retracement here. You got a nice bounce off that 50% retracement, followed by a continuation flush. And we've actually touched the top of this GP zone. So that golden pocket, okay, the golden pocket, very important level for many traders, and that typically falls between 61.8 and 65% retracement levels. So from swing high to swing low, we have already pulled back 50% from 2024 swing low to the high that was put in here on the date of the week of December the 16th. So that first test, you can see we got a very aggressive dead cat bounce, and we've got some supply, right? We've got some supply sitting at 19,800. We've got a little bit of supply here at our weekly 50 SMA sitting at around 20,000. And then our next area of resistance is going to be up here towards 20,430. Now, the only thing I don't like to see here on this weekly chart, setting up a little bit of an inverse hammer, tells me that we've got a little bit more potential to go. You can see where we kind of tested. We tested prior week's highs. We got rejected. We had double supply in that area. I think that this is probably going to come back down towards 19,000. And I think before this is said and done, we are going to break into this 18,000. I would fully expect if we do break into the 18,000 to stop somewhere in the middle between 18,600 and 19,100. So a little bit of a big range there. But again, that could be a 1-2 day test in there, and then you can quickly get that reversal. Now, if we do start to close outside of that GP, let's say we close outside of 18,691 to the downside, what potentially could we be looking at from there? Potentially could be looking at prices of around 18,266. That's also going to correlate here with this aggressive bounce that kind of started this rally here going all the way back to August. It's going to correlate with this, double bottom back test here in September. And that would take us down into this range here. Okay. So what I can see happening here is I think we could definitely come down into 19,000, get one more little dead cat bounce here, and then followed by one more kind of capitulation, throw in the white towel. And, whether we want to wick through that area or whether we want to hold that area, I think it's going to be from this zone that we finally start to see this recover and look something like this going into the rest of the year. Now, again, how long this is going to take is going to be truly dependent on what news comes across the headlines. But if you are short right now, definitely want to hold your short positions until we close over a prior week's high. Okay, so anyone who is shorting this market, you definitely want to hold those short positions until we close over a previous week's highs. You're targeting prices here, you're targeting prices here, and you're targeting prices here. Again, make sure you're taking profits along the way. If you are looking to kind of, time the bottom here and see if you can catch that swing trade for the rally back up to the upside, what I would look for is to see how deep into this prior week's wick that we get into. If we do come down into the low 19,000s once again, and we put in a higher low, you could maybe start to add there. If we do take out that low and we do start pushing into that 18,000, those mid 18,000 levels, I would kind of hang tight and see if we can tag this area right here, which is going to be 18,600 to 18,700. Those are going to be some levels that I think you need to be targeting if you're going to dollar cost average or you're looking for a swing trade. Now, again, things can change. Worst case scenario is that we just continue to kind of bleed out this year, and we do go into a full-on bear market, which is going to put us over 20% and actually holding above 20% down from the all-time highs. Again, typical bear markets last between 12 and 15 months, and you can see drops between 20 and 35% before they are all said and done. Again, I don't think we're going to get down that deep. I don't think we're coming down 35%, maybe 20, maybe 25%. And then I think we're going to see a nice kind of V-shaped recovery, almost like what we've seen in the C19 crash in 2020. Now, with that being said, for a lot of the bears that are kind of, raising up the victory flag here and kind of telling everyone and spreading across social media that, the market's going to zero, that's it, it's over, we're never going to see a green day again. I would kind of pump the brakes a little bit, because based on technical analysis, this move is about 50% done. So maybe between 50 and 60% done. And as far as timeline, if you really want to look at it, we've been in a 1, 2, 3, 4, and this is the 5th consecutive red week. So we are about a month to almost a month and a half into this sell cycle. Okay. However, we are coming off of about 2 months of consolidation. So typically, if you go from the high to where we are currently now, you're looking at about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, plus those 5 weeks. You're looking at the better half of almost 3 months in this move. Now, typically, corrections, if this is only going to be a correction, which is keeping it less than 20% from all-time highs, typically corrections last anywhere between 3 and 5 months. Okay, so again, we're about 60 to 65% down with this move. Now, you can definitely spend a few weeks in this range kind of consolidating before you put in one more leg down, and then you kind of see that capitulation and you see that move to the upside. Or you can get something very quick, maybe news driven, that's a very flashy type of decline, followed by an immediate recovery. It's yet to be told. But what I'm thinking is, I think we see a definitive move by at least May. Okay. So I think that by at least May, we're going to see, okay, this is turning into a bear market, and let's just kind of, keep our heads down and try to, protect ourselves for the better half of the year. Or I think that come May, we are going to see some type of low be put in, whether it is a higher low or whether it is a new low. And then I think we're going to start to see this recovery rally. Okay. So end of April going into May, I think we're going to be pretty much done with this correction, or definitely going to know whether this is going to be a bear market. If you guys would like to trade with me each and every single day live, you guys can definitely join Evolution Traders, get access to my day trading course, access to some of my mindset, and psychology videos that I've put in the community for everyone. Get access to an amazing community with amazing traders in it. Also, make sure to leave a thumbs up, leave a comment. Let me know, what price do you think that this market's going to? Are you in agreement with me that, this move is about, let's say, 50 to 65% done? Do you think that it's just getting started? I'd love to know your guys' thoughts and see what you guys kind of think about the whole situation here. Until next time, guys, we'll see you guys on the next video.